Welcome into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates. Securities offered through Peak Brokerage Services, LLC. Advisory services offered through the Retirement Guys Formula, a registered investment advisor. America's Retirement Headquarters, America's Medicare Associates, and the Retirement Guys Formula are separate and independent entities from Peak Brokerage Services, LLC. Thanks for joining us today here on America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker and Scott Kirshner. My name is Chris Swan, and like I said, we do appreciate you joining us. Here's how you reach out: 419-794-3030. That's the number, 419-794-3030. And online, americasretirementheadquarters.com. On today's show, we're going to tackle the, I would say, fairly difficult question on how to invest in a market crash. Before we jump into it, though, let me check in. Guys, Nolan, welcome back. How are you guys doing today?
We are doing great. Weather's getting a little bit nicer. I can feel the sunshine on my back, and it's finally coming our way. I can't wait. Can't wait for spring and summer.
Yeah, absolutely. After getting hit with about 14 inches of snow here a week ago, the forecast, the 10-day forecast is looking great. Spring is right around the corner.
Spring has sprung, but thanks for all of you listening today. It's going to be well worth your time to stay tuned today. Obviously, got always a great topic on our How to Retire series. Going to be talking about how to invest in a stock market crash.
Exactly. Usually when we do the second segment, I'll come back with a little anniversary thing, this artist released this music and what have you, how many years ago. There is an anniversary we're coming up on here, kind of a dubious one. Right around a year ago, we were in the early stages, in fact, of a market crash. And someone recently asked Morningstar's Christine Benz what the big lesson from 2020 was. Here's what she said.
That panicking is rarely rewarded. We saw during that period that investors who were sellers would have missed out, at least on the early days of the recovery. The market recovered very, very swiftly. On the other hand, I would also warn investors that recoveries are usually not that swift. The typical length of a bear market is closer to 2 years, not just a few months. So bear that in mind as well.
Ms. Benz has some good points there, as she so often does. The market did recover, but most corrections are going to last considerably longer than that one did. So, guys, the markets are close to all-time highs right now. Why are we even talking about investing when the stock market crashes?
Yeah, good point. I mean, why would you talk about it when the markets are so healthy, things are going great, markets are at record high? To me, it's kind of like running the fire safety drill. Unfortunately, the market's going to crash again. So if we can talk about it now and help our listeners get prepared, I think there's going to be so much more that they can be able to turn a panic into an opportunity like what they talked about. On today's show, we're going to talk about things that you can control and not obviously worry too much about things you can't control. We do the Economic Summit. It's probably one of our most popular events. We just finished it up in February, and I think a lot of people come out to that event and they want to know, guys, what do you think the market's going to do over the next 6 months? And, we're always willing to give our opinion, but at the end of the day, the market doesn't care what our opinion is. The market's going to do what the market's going to do. Last year, about a year ago, really shows how fast things can turn in the opposite direction. So I have a 17-year-old and a 14-year-old, and, ever since they were little kids, we've run this fire safety drill and talking about, hey, if the house catches on fire, here's how to get outside, and here's where we're going to meet. So the question is, for you as a listener, did last year teach you a lesson, or, the previous stock market crashes, or have you run the fire safety drill? And if you're not sure, today's show is really for you, because we're going to give you those specific steps on how to get out so you hopefully don't get hurt, what to do, and obviously how to turn that crisis into an opportunity for you. So it's going to be a great show. We've got a lot of things that we're going to talk about. I think the first thing, maybe you always start with the why. Why is this topic important? And if you look at it, J.P. Morgan, they put out a 20-year annualized return by asset class. So if you Google it, I'm sure you can get the chart. Of course, if you want to get a copy of it, just reach out to us. But if you look at it, this chart shows from 1996 to 2015, over a 20-year time frame, it showed the performance of different asset classes like, real estate investment trust, the S&P 500 index, like a 60-40 blended portfolio, all the way down to inflation and oil or home prices. And at the bottom of the list, what this study shows is that the average investor over that 20-year time frame only earned 2.1%, which was actually lower than inflation.
Wow, that is really low.
You know, I think the reason why is when it comes to investing, it's difficult because your emotions get involved.
Sure.
I mean, when the panic happens, you're like, oh gosh, what do? I better get out. I better, stop the bleeding before it goes to zero. And, I'm going to wait till things get better. And now that the market's better, a lot of people are like, well, I need to get in. I mean, we see this with, high flying electronic cars that everybody wants to get into, the digital currency. Those are the hot topics. But just remember, the last person at the party is typically the one that gets hurt the most. So you really got to be very careful on what you do.
Nolan, don't you think, it's kind of like the fire safety drill. You don't want to practice that while the fire is going on. You want to be prepared. You want to be out ahead of it. It's kind of like, with homeowner insurance. You know what? I don't need homeowner insurance. And then all of a sudden your house is on fire and you're calling up your agent and you're saying, hey, I'm ready to sign that application now. And they say, well, what's them sirens I hear in the background? Oh, that's
don't worry
nothing.
about that. Yeah,
don't worry about that. So, it's very important with investing as well to prepare and get out ahead of it. The risk's going to be there. It's going to happen. Like look what happened a year ago. And if you've got those safety things put in place to protect against that drastic drop, your return's going to be better than 2% over the longevity.
Yeah, really. I mean, if you think about it, if you go back to last year, if you could go back in time, and hopefully those of you that are listening, took advantage of that major drop that we had in the market, because if you did, looking at where we're at today, you'd be so much further ahead. So really, the reasons to turn the fire safety drill is, number one, is Scott talks about, we don't want you to get hurt. But number two, we want you to be able to turn that panic into an opportunity. And we want you to get prepared because this is going to happen again. Another chart that I look at is a chart that was provided by First Trust. This chart was showing the intra-year declines versus calendar year returns. And, what this chart would show is that it's actually very common that the market goes down, 10, 15, 20% in any given year. And that's not necessarily how the year finishes, but every year we experience some type of volatility. So how you respond to that can mean the difference between pain or pleasure. And really, if you want to make sure that your goal is to make sure you have enough money to last the rest of your lifetime, we want to try to kind of help reset that clock and get you, ready to be able to buy on the dip. So here's the first tip. Number one, what we want you to do is we want you to have a predetermined formula. So the predetermined formula says, if this happens, if the market goes down, let's say 15%, I'm going to move 25% back into the market, or I'm going to rebalance my portfolio back to the original 70-30 mix or whatever your allocation is based upon your risk tolerance. And then if the market goes down, say 25%, then you're going to do this. The same would be true, though, is on the flip end of the scale. We'll talk more about this in our second segment, but as the market rallies like it has, you also want to be taking steps to protect your gains and protect your profits. Again, if we look at the basics of investing, it's actually pretty simple. Buy low, sell high.
Yeah, exactly. And I think it really depends on where you're at in life as well. Someone that's 30 years old, they finally landed that job that's going to give them a career. You start investing and put that money in there. You don't want to look at these charts. You want to just put it in there and let it do its thing. But if you're 65 years old, I would even go back to maybe 60 to 65 years old, your investment ideas have changed. Now you're looking at, okay, I can't afford to lose like I could when I was 30 years old. I've got to have this money here if I want to live the lifestyle I'm living. So you have to make those changes and make sure that you are protecting the gains that you've made over the years.
Yeah, very valid point. I call it the mind shift. Yesterday we met with a great couple. They were 36 years old, and we were talking about his 401k plan. And I said, It's okay. Use your 401k to be fairly aggressive because you're 36.
Sure.
If the market
Absolutely.
goes down, quite frankly, that's actually okay. You get to buy more with your money.
Yep. Yeah.
But, for those of you that are close to or in retirement time, you unfortunately, you don't have the luxury of time to make up for mistakes. One of the things when I served in the United States Marine Corps, we were always taught to have a backup plan.
Sure.
You got to have plan B. If you're going down this route and here's the expected game plan, you need to have game plan and plan B. In this world, in the financial services world, we've really coined that phrase in what is called the independent income system. In fact, if you get an opportunity, go over to our YouTube channel. So if you go over to YouTube, type in America's Retirement Headquarters, look at our playlist and look at the video on the independent income system. We'll show you specifically where we see threats and opportunities right now in the marketplace. And more importantly, what we'll do is we'll show you how to make sure that you have a backup plan. So, again, if you're within 5 years of retirement or if you're recently retired in the last 5 years, the independent income system is the way to kind of be able to kind of put that plan in place, make sure that you can fill up those buckets to make sure that, if your stock market investments are down a little bit, last thing you want to do is be, unfortunately, selling in a declining market. It's negative dollar cost averaging. So you're actually having to sell more and more of your investments when the market goes down. But if you follow the independent income system, you can have the short to midterm money in things that are maybe safer or, not exposed to stock market risk. That allows you to let your stock market money, go through the ups and downs of what the market does. And really, if you're not confident in what your current plan is, it's okay to get a second opinion. It is. We'd obviously be happy to give you a second opinion. Of course, there's other great qualified professionals in our industry that you can get a second opinion from too. I met a gentleman last week when we were down in Atlanta, and he talked about his son who had some health challenges, and they told him that nothing could be done. But actually, he got a second opinion, and you know what? A lot could be done.
Yeah. It's like a lot of people will go out and they'll do their plan B for a lot of the day-to-day life needs and things that they have, but they may not necessarily have a plan B for their financial security, and you owe it to yourself, and second opinions are always a good thing.
Again, it never hurts at all. And the thing with the fire safety drill, now is the perfect time to do it, honestly, while things are rosy, because it is not a question of if the market is going to take a downturn. It's a question of when the market is going to take a downturn, how many times it's going to happen over the course of your retirement. You mentioned the kind of disappointing returns that people have seen over the past 20 years on average. You said 2.1%, I think?
Yeah.
You take into account the fact that there was the 2001 market correction and there, the 2008 market correction last year, all these different factors where if you didn't have a plan in place, if you don't account for these things that they're going to happen, rather than doing the buy low, sell high, you saw what a lot of people did last year where they sold low and then they either priced themselves out of the market or they bought high and, they're just now getting back in. And that is counterintuitive to what you want to achieve in retirement. I asked the question at the beginning, why are we talking about investing when the stock market crashes while we are close to these all-time highs? I want to call back to the fable of the ants and the grasshopper. It is not a question of just kind of maintaining the status quo while everything is great. It's going and preparing for the next market downturn whenever that does happen, and know that you won't have to be affected by it and make these drastic decisions. That all starts with a conversation with America's Retirement Headquarters, 419-794-3030. Again, go to their YouTube channel, check out the video on the independent income system. A lot of great educational videos there as well. Also online, America's Retirement Headquarters.com. We heard from Miss Benz, Christine Benz, talking about what the big lesson of 2020 was. Guys, let me ask you, what is your biggest takeaway from 2020, and how should investors get ready for the next crash, whenever that's going to happen?
Great question. And I think the first thing that listeners should ask is, how do you lose money in stocks? So again, if you're listening today, answer that question. How do you lose money when you invest in stocks? So first of all, either number one, you and or the person you hired decides to sell an investment. So the first thing that you need to think about, is there really a rational reason to sell? The second way that you can lose money in stocks is if the company files bankruptcy, then obviously an investor loses all their money. So what you really need to do as an investor is know what you own and why. So again, what are the type of investments that are currently in your portfolio? If you own, say, mutual funds or a variable annuity, really, what is made up with inside of that? What is the specific holdings that you have and the reasons why you own those companies? One of the areas that we really like right now, I think I'm concerned about the future. I look at people like Dr. Robert Schiller. He won a Nobel Prize in economics for his ability to predict the price to earnings ratio. And, he's talking about the market is at extremely elevated levels. So now is the time to be careful. And again, if you look at it, if you go out in Toledo, you can see this. We went to a restaurant the other day. I think it was our table and 2 other tables in a restaurant. And, here in Maumee, it's lunchtime. Everybody usually is normally out and about having a good time. And there's nobody in the restaurant at 12:30 in the afternoon. On the flip end of the scale, a good friend of mine, the Parkers, they own Sandman over on Airport Highway, and they have a couple different locations in town. So, a little shout out to them. If you're looking for landscaping, they're a good place to be, but they are so darn busy, they can't keep up. And, again, areas like constructions, or if you want to get a pool, good luck with that. It's, 2.5 year waiting list.
Right.
So I think now is so important for you as an investor to make sure that you understand exactly what you own and the reasons why. The companies that we like buying companies that are strong. We like to buy into good businesses. So again, if times get tough, if you can own a company that has a large amount of cash in the bank or has very low debt, they're very financially sound. That's not to say the stock price won't go up or down short term, but they can kind of weather through that. And really, Scott, It's no different than like an individual's family situation. The people that try to keep up with the Joneses and they live paycheck to paycheck, the next time they have a downturn, they're in big, big, big trouble.
Yeah, absolutely. I talked with a couple of companies. I do group health insurance, and, there are companies that are having record years. And, one of the things that I take away is, I've been working with you now for going on 2 years, and when all of this happened a year ago, we were on the phone, we were contacting all of the clients, we were letting them know what was going on, and there are people that their portfolios are higher now than they've ever been because of the way that you were able to manage, annuities. Annuities is a tool. It's a piece of that investment pie. There again, it's not the entire pie because there's other things that you need to do. And we've talked many times, Nolan, you've pounded this many, many times, is diversification. One way to protect is to diversify your portfolio. And annuities, that's an area, there's several different types of annuities, but, if you're looking at an annuity is a way that you can actually take advantage of the upside and protect against the downside. Now, you may not reap the 15% increases on that big upside swing, but you're also not going to lose when it drops drastically. And, we sell annuities here. I think annuities are great. There are a lot of people out there and other advisors out there that totally disagree with that idea. They think that annuities, and these are the same people that totally disagree with life insurance. If you look at life insurance, for example, it's a way to protect the money that you've got invested. But if you look at life insurance products, it's another piece of that investment pie that has not lost money. If you invest in a whole life or even a universal life policy, it's something that has always made money. You don't lose in those. But with annuities, I think is a great opportunity to take advantage of protecting yourself, especially if you're afraid that the market is going to take a crash like it did a year ago. Annuities is a way to protect on the downside.
Well, Chris, I would say he just said the word annuity, so I think isn't that a 4-letter word?
In some circles, it certainly is. Yeah.
I guess we're on the radio, so we probably have an FTC fine for saying that. You're right, though, Scott. Is you see a lot of advisors kind of fall into one camp or the other. They talk, you should always have your money in stocks, or you should always have your money in insurance products. And, to me, my opinion is there's no Swiss Army knife approach. There's no one right product for every single situation. Your situation is fairly unique. I love stocks. Again, I talked just a minute ago about stocks that have, high cash positions, low debt. If anybody's listening, and if you want to know what those stocks are that you and we love, let us know. Give us a call. We'd be happy to share with you the stocks that make up that list. But at the same time, here we are at a record high. The market's at an all-time high. Again, going back to the philosophy of the independent income system, I would agree with you. So the word annuity means that it's a product issued by an insurance company. So again, first of all, the claims paying ability is only as good as the issued insurance company. Mm-hmm. And there are different types of guarantees. Annuities are somewhat of a confusing topic. There are different types of annuities. So you can buy an annuity that pays you an income for a defined period of time or for the rest of your life. You can, have an annuity that, in your case, what you're talking about protects you against loss. You can have an annuity that pays you a fixed rate of return, as an alternative to other traditional fixed investments. And I think you're right, Scott. I think you're really on track to something. With the market at record highs, in the first segment, we talked about having a plan B. And by taking money off the table and protecting some of the gains that you have, and putting it in a product like an annuity or some other type of investment that's not subject to stock market risk, that's going to allow you to have a plan B. So if and when the market goes down, those great stocks that I'm talking about, they go down too. If and when they go down, you're not forced to sell them when the market's down. Again, you're able to then switch over to that plan B and pull money off those safer accounts.
Absolutely, and that goes back to the diversification. You have several different types of products in your portfolio to protect you. I mean, at the end of the day, we want to make sure, like we've said before, when I retire, I want the last check I write to bounce. And the way to protect against losing that is diversify, have an annuity put in place that's going to give you that. If you have the right annuity put in place, you can have that lifetime income. There are several different riders you can have on annuities. Your beneficiaries are going to get the proceeds upon death. You can have a waiver of premium. There's all kinds of different riders you can throw onto an annuity. And there again, an annuity is actually backed by an insurance company, like you said. So they're only as good as the company that represents them. And you want to make sure that you talk to an advisor, get that right annuity, that right company that's going to work for you, and make sure to protect the money that you've got put away.
Yeah, again, and we're talking to a large audience. So I mean, we have hundreds or even thousands of subscribers to our YouTube channel. So there's not one right answer for you that's listening today. Again, the takeaway is there's some really good stocks that maybe you should consider right now that we love, that are our favorites. There's the ones that have strong balance sheets, large cash positions, low debt. There's also, for those of you that are close to or in retirement time, the market gave us a second opportunity. As we talked about, it doesn't normally rebound as fast as it did. I mean, I've been doing this for 26 years. I remember the 2000 market, the 2001, the 2002. I mean, it was year after year. It was painful. Don't let those past lessons go by, and don't not learn from those lessons. So again, learn from what happened in the past. The market with the huge rebound has given you an opportunity to step back and take a look at your plan. Understand what you own, the reasons why you own the stuff that you own, what specifically you have in place. And, once you really get a good handle for what you own, the next thing that you need to do is trust your plan. Trust when times get tough. This is why you build a plan. And quite frankly, if you have an advisor, this is what your advisor's job is. If you have not heard from your advisor over the last year, that's unfortunate. I
Yeah.
mean, that's really a shame. So if you're always, questioning, what do I own? Why do I own? Is this the right investment for us? The final answer is get a second opinion. We're always here to help, and we're here to educate you to make smart financial decisions to keep moving forward, to continue to, profit and protect what you've built a lifetime to accumulate.
Nolan, you're absolutely right. This fast rebound gave you the hand across the brow and a whew. We weathered this storm, and this opened our eyes to what could possibly happen in the future. Let's protect against that happening again. Because the next one may not rebound as fast as this one did.
Again, it's important to trust in your plan. If you don't have the confidence in your plan right now, or if like Nolan said, if your advisor hasn't reached out to you in the past year, that is a shame. But this is the perfect opportunity to go ahead and really get that second opinion, really fine tune and hone that plan to say, to put contingencies in place for what's going to happen the next time the market sees a downturn, whether it be this year, whether it be 5 years from now, whenever it is going to happen, knowing that you will have the confidence and be able to weather that storm and not have to do what so many people did this time a year ago and do that panic selling and sell at market lows. But I'll start with that phone call to America's Retirement Headquarters, 419-794-3030. You can always find them online, americasretirementheadquarters.com. And we want to thank you so much for joining us this week here on News Radio 1370, WSPD, and 92.9 FM. Have an excellent remainder of your weekend, an excellent week ahead of you. And gentlemen, as we wrap up the show, I want to leave you with the final word.
I would say spring is coming, and looking forward to great weather ahead. Think about your finances. Make sure that you build an all-weather portfolio.
America's Retirement Headquarters is located at 1700 Woodlands Drive in Maumee, Ohio. You can reach them by calling 419-794-3030 or online at americasretirementheadquarters.com. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate, and when redeemed may be worth more or less than when originally invested. Nolan Baker is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and/or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Nolan Baker, Ohio Insurance License Number 27787.